XRP at 250 is not that great of a deal, right? You look at XRP from 250 to $13, it's like a 4.5x, which is great, but it just doesn't offer the same reward, right? So if you guys try to approach Bitcoin the same way you approach the S&P or the Dow or the Nasdaq, you're just not going to see that same reward, right? Because there's way less volatility in the Nasdaq and the Dow Jones and all these different things. Now, of course, market crashes like 2020 kind of really just change our overall perception of like, that type of volatility. But for the most part, it's more of that slow and steady. So you do have really a better like just DCA, forget it, approach over 20, 30, 40 years with those indices. But when it comes to volatile risk on assets, you're really leaving a ton of money on the table by being lazy and not being tactical and not establishing good rules for yourself. So it doesn't have to be, hey, I'm on the charts every day, 4-hour timeframes, 15-minute timeframes. I would say that if you guys even looked on a weekly level once a week and then made some decisions based on kind of those value zones, you would have a much more profitable venture, regardless if it's Bitcoin or anything else, by just identifying on a weekly basis important levels of interest and then being a little bit more aggressive and tactical at those levels.